President Trump kicked off July by announcing a huge trade deal with Vietnam, claiming Vietnam will charge 20% tariffs on its exports to the U.S. instead of 46%, and an even steeper 40% tariff on any goods transshipped through Vietnam. In return, he boasted Vietnam would open their market to the United States, selling American products at 0% tariff. His Truth Social post used grandiose language, "my great honor," "total access," even touting U.S. large engine vehicles for Vietnam. The deal's terms on paper were quite simple. 20% U.S. tariff on most imports from Vietnam, a reduction from the 46% Trump had threatened. 40% U.S. tariff on goods routed through Vietnam from third countries to catch anything that might have originated elsewhere. 0% Vietnamese tariff on U.S. products, giving America total access to Vietnam's market. These bullet points were Trump's main bullets, a laundry list of tax rates. But the devil, as always, is in the details. What is transshipped cargo? Why would Vietnam accept all this? And how does China react to America cutting in on its action? The centerpiece of this deal is the concept of transshipment. In plain terms, transshipment means rerouting goods through a third country to avoid tariffs. For example, a Chinese-made widget might be sent to Vietnam, labeled "Made in Vietnam," and then shipped to the U.S. to dodge Chinese tariffs. U.S. officials have been warning that this practice was rampant. A recent study found that 16.5% of Vietnam's exports to the U.S. in 2021 were likely made of rerouted China. In other words, nearly 1/6 of Vietnam's trade with America may involve hidden Chinese origin. Vietnam's factories indeed rely heavily on Chinese inputs. Garment and shoe makers in Vietnam import huge amounts of yarns, fabrics, and components from China. A sneaker might have its soles and laces made in China, then get some finishing touches in Vietnam. Under normal rules, that's fine, as long as enough value added happens in Vietnam. But if too much of the product is Chinese, U.S. Customs would call it transshipment. In this new deal, Trump's team wants to put a 40% tariff on any product that contains so much foreign content that it's effectively Chinese-made, even if it passes through Vietnam. As the U.S. Commerce Secretary, A.K. Trump ally Howard Lutnick tried to clarify, if another country sells their content through products exported by Vietnam to us, they'll get hit with a 40% tariff. Exactly how you measure that content to 10%, 50%? Nobody knows yet. Even trade experts are scratching their heads. Does anybody know what a 40% tariff on transshipping means? Quipped Logistics CEO Ryan Peterson on Twitter. U.S. buyers likewise have questions. If a pair of Nike shoes has 30% Chinese materials and 70% made in Vietnam, is it a transshipment or not? The ambiguity is enormous. Strictly speaking, rerouting with minimal change is considered illegal, but using foreign parts is normal business. Confusing the two creates chaos and scary uncertainty for manufacturers. The reaction from U.S. companies and retailers has been mixed and worried. On one hand, some see any deal as better than none. The 20% tariff on Vietnamese exports is lower than the feared 25 to 30% range some expected, and weighed down from 40%. That could save American consumers a bit on shoes and shirts. But on the other hand, think about what Vietnam sells to the U.S. Shoes, clothing, electronics, furniture, seafood. Much of it is made with Chinese-supplied parts. For example, Vietnam sent 274 million pairs of shoes to the U.S. last year. If those shoes have any Chinese yarn or glue, a strict new rule could slap a 40% penalty on top of already existing duties. Critics say this could backfire, making Vietnamese goods more expensive than Chinese ones. One supply chain expert bluntly noted that because China currently faces a 55% tariff in the U.S., and Vietnam would now face only 20%, some brands might just stick with Chinese factories, at least for now. As one analyst warned, Chinese factories which have spare capacity could benefit in the short term, while Vietnam, which has limited capacity, faces a rougher road. A Nike spokesperson and Adidas exec admit they're still parsing the details. Meanwhile, an industry group lamented that these tariffs are unnecessary and would hurt American consumers. The American Apparel and Footwear Association noted that Vietnam is the second largest supplier of clothing and shoes to the U.S. and said it looked forward to clarity on the plan. In short, retailers see opportunity and risk. They like lower tariffs, but worry the 40% monster could spook supply chains. Vietnam's government has been cautiously happy. Hanoi sees the U.S. as a huge export market, the largest for Vietnam, and a strategic partner against Chinese influence. Vietnam's finance minister even called the deal an important negotiation result, creating hope and expectations for businesses. Getting a 20% tariff instead of 46% on its goods is indeed a reprieve. In exchange, Vietnam publicly agreed to give U.S. products preferential market access, including letting in U.S. large-engine cars, Trump's beloved SUVs. This is a new twist. Vietnam will essentially sell American products tariff-free. The Vietnamese official phrased it as expanding harmonious and sustainable trade ties with all partners. At the same time, Hanoi quietly signaled it will cooperate on the transshipment issue. Before the U.S. announcement, Vietnamese customs had already been cracking down on suspicious shipments from China that looked like tariff loopholes. Indeed, Vietnam's statement on the deal, a reciprocal, fair and balanced trade framework, didn't spell out all details, but it did say Vietnam would continue working with the U.S. to resolve priority issues for both sides. In other words, Vietnam wants the lower tariff, but doesn't necessarily want to become a full-on Chinese mail drop either. Its leaders know they have one foot in Washington and one in Beijing. Officially, Vietnam maintains close ties to China. China is its biggest trade partner, even as it courts U.S. investment. How Vietnam manages that balancing act under the new rules will be crucial. Unsurprisingly, China loudly objected to the deal. Beijing warned that any U.S. tariff exemptions given to other countries at China's expense would not be acceptable. China's Commerce Ministry bluntly firmly opposes any party striking a deal at the expense of China's interests. In a statement, a Chinese spokesperson said if Washington pushes its allies to curb trade with China, then China will never accept it and will take resolute countermeasures to safeguard its legitimate rights. In diplomatic speak, that translates to, Beijing will not sit quietly if its exporters suddenly get boycotted by Vietnam or others under U.S. pressure. The tone from Beijing was even more dramatic in state media. A Xinhua spokesman accused the U.S. of using the banner of reciprocity as a pretext to pursue hegemonic politics and unilateral bullying. In other words, the Chinese government is framing Trump's Vietnam deal as part of a worldwide campaign to strong-arm countries and to anti-China pacts. The official urged all parties to stand on the side of fairness and justice, align with the right side of history, and uphold international trade rules. Yes, they used phrases like that and warned that if trade becomes the law of the jungle, where the strong prey on the weak, all countries will suffer. And some Chinese leaders made clear that any U.S. deal they see as hurting China will provoke retaliation. This rhetoric didn't identify the Vietnam deal by name, but it clearly referred to it. China welcomes fair negotiations, they say, but will not tolerate bargains struck at Beijing's expense. Meanwhile, the U.S. was also touting progress with China itself. In late June, the Trump administration announced a separate trade agreement with China. Under that deal, U.S. tariffs on Chinese imports would be cut to 30%, while China's tariffs on U.S. goods would fall to 10%. By contrast, before this deal, U.S. duties on Chinese goods averaged over 51%. Notably, the U.S. kept its special 20% fentanyl tariff on China in place, and China agreed to resume shipments of rare earth magnets to the U.S. important for tech products. Why mention this? Because it shows the uneven playing field. Vietnam now has 0% tariff on American goods, while China's best outcome was still 10%. And American tariffs on China, though lowered to 30%, remain far higher than the 20% now on Vietnam. From China's viewpoint, this Vietnam deal might look like a way for the U.S. to use an ally to keep squeezing China, even as the U.S. publicly signs a truce with Beijing. Financial analysts warn that if the U.S. expects Vietnam and other countries to cut ties with Chinese suppliers, that is seen as a provocation. One note from Capital Economics warned that countries forced to drop Chinese trade for U.S. deals will provoke renewed escalation of U.S.-China trade tensions. In fact, the Vietnamese deal was similar to a small pact the U.S. made with Britain in May. 10% use tariff on UK goods versus special access to UK beef. And British officials also took aim at Chinese content in their factories. Everywhere the U.S. looks to cut Chinese products out of global supply chains, Beijing is bristling. So what's the bottom line? In the end, the U.S.-Vietnam tariff deal is as much about China as it is about. Officially, it's pitched as a trade win for the U.S., lower barriers for American exports, and a win for Vietnam, relief from even higher tariffs. But it's really a geopolitical move. It tries to shut down the China as Vietnam loophole that U.S. leaders complain about. It tries to push Vietnam to side with Washington, even if that annoys Beijing. And it sends a signal to China that the U.S. will pay friendly nations like Vietnam for trades that disadvantage Chinese goods. From a public perspective, the deal's logic has raised eyebrows. Critics wonder whether it will actually boost American industry or just complicate relationships. Will U.S. consumers end up paying more for shoes and electronics if Vietnam retaliates by sourcing more from China? Or if China imposes its own counter-tariffs? Are Vietnam and its partner companies liable to be caught in the crossfire? On the streets, most people see this as another round in Trump's trade gambit, bold tweets, big numbers, and lots of uncertainty. And of course, there is the spectacle. The U.S. president praising large engine vehicles for Vietnam on social media and holding up a map of allies, while China fumes about fairness and history. It's a political media drama as much as an economic policy. At its core, this story is about narrowing the gap with China at someone else's expense, and that strategy is controversial. As one economist put it, both Vietnam and the U.S. know this could be a flashpoint for a new trade skirmish. Whether this deal is ultimately clever or clumsy, it certainly has kicked up a hornet's nest of questions. This analysis draws on U.S. government announcements and reporting from Reuters, FreightWaves, and other trade experts, among others. These provide the factual details and official reactions behind the story.